Good evening to everyone in the Cayman Islands and good morning to those in Hong Kong. I'm delighted to be here today with Chris Humphreys and Megan Wright from Stuarts law firm in the Cayman Islands to talk about cryptocurrency funds and virtual assets in Hong Kong and the Cayman Islands. Stuarts is a specialized investment funds firm based in Cayman with an experienced team of investment funds lawyers with in-depth knowledge, understanding and expertise. Chris joined Stuarts in 2004 as one of the founding partners and is currently the managing director of Stuarts. Chris leads Stuarts' investment funds team and is a recognized leader in his field with over 16 years' experience in investment funds. He's admitted as a solicitor in Cayman, the BVI, and England. Megan joined Stuarts over 12 years ago. She's a UK and Cayman admitted solicitor. Megan has specialist experience in funds with blockchain technology and cryptocurrency strategies. She previously worked in the corporate department of an English law firm. In the webinar today, we'll be broadly looking at the Cayman Islands and Hong Kong as cryptocurrency jurisdictions and recent developments in the crypto space, marketing and managing funds in Hong Kong, and virtual asset service providers in Cayman. The licensing of virtual asset service providers in Hong Kong, the Hong Kong OFC and LPF as fund vehicles, and recent cryptocurrency trends in both Cayman and Hong Kong. I'll now hand over to Chris to discuss the Cayman Islands as a jurisdiction for cryptocurrency and to also look at the recent developments in Cayman in the digital assets space. Over to you, Chris.
Thank you, Julia. Well, Cayman is, of course, one of the most popular jurisdictions in the world for blockchain-related businesses and cryptocurrency funds. And the reasons for this are the benefits that the Cayman Islands offers, which include familiarity to the managers and the investors, a robust, flexible legal system, a stable political climate, the availability to high-quality service providers, and a proven record as the world's leading financial hub. Julia, would you like to discuss the marketing of funds in Hong Kong?
Thank you. Thanks, Chris. So I'd first just like to say that when I talk about cryptocurrencies, I'm referring strictly to cryptocurrencies, which are not considered traditional securities or futures contracts under the Securities and Futures Ordinance, the SFO in Hong Kong, which is the primary source of regulation relating to asset management and dealing in securities in Hong Kong. And the primary regulator is, of course, the Securities and Futures Commission, the SFC. And specifically, Section 114 of the SFO says that no one shall carry on a business in a regulated activity, hold themselves out as carrying on such a business unless they're licensed by the SFC. Dealing in securities constitutes a regulated activity and it's very widely defined in the SFO. Generally, it means in relation to a person, it means making an offer or an agreement with another person or inducing or attempting to induce another person to enter or offer to enter into an agreement with a view to or for acquiring, disposing of securities or underwriting securities, or the pretended purpose of which is to secure a profit to any of the parties from the yield of securities or by reference to fluctuations in the value of securities. In Hong Kong, the marketing of a fund by itself or by an intermediary will constitute dealing in securities under the SFO. This is because the fund itself is considered a collective investment scheme under the SFO, and interests in collective investment schemes are considered securities. A limited exemption from the requirement to be licensed to deal in securities in this context exists where a person as principal deals with someone who's a professional investor within the limited category of professional investors, which is often referred to as type 1 professional investors. In this context, as defined, it's very limited, and categories such as high net worth investors, which are set out in the professional investor rules, are excluded from this exemption. Only the fund itself can rely on this exemption, and if the fund wishes to rely on it, all marketing activities have to be conducted by representatives of the fund itself and not representatives of any intermediary, such as the investment manager. And all marketing materials must be issued in the name of the fund itself. So a fund may only market its investment interests in reliance on this very limited exemption to the very limited category of professionals. And these are mainly licensed investment intermediaries, authorized financial institutions, regulated insurance companies, regulated collective investment schemes, a recognized exchange company, and or any government or institution, and so on. Where an intermediary markets the investment interests in a fund, the intermediary would need to be licensed with the SFC to conduct regulated activity type 1 unless there's an exemption. There are 3 potential exemptions which might be relied on. First is the incidental, secondly is dealing through a licensed securities dealer, and the third is being the holder of a temporary license. And today I won't talk about the temporary license exemption. So the incidental exemption means that where an intermediary is licensed for type 9, that's asset management regulated activity, they're not required to be licensed for type 1, provided that the activity is carried out solely for the purpose of the intermediary's asset management business. This means effectively that an asset manager with a type 9 license, which is managing a fund, can market its own fund. But the SFC interprets this narrowly, and the SFC has said that where a fund manager who's already licensed for type 9 regulated activity engages in marketing activities for another fund, it can't rely on this incidental exemption. So the exemption won't apply if the fund manager markets other funds which are not under its management. The other exemption is dealing through a licensed dealer. That's an additional exemption from the requirement to be licensed to deal in securities is available where a person deals through another person who's licensed or registered to deal in securities. Arrangements can be therefore made for the marketing of the interests in the fund by another type 1 licensed or registered intermediary. The exemption won't, however, apply if a person appointing the licensed intermediary to market the interests in the fund receives any form of commission or other remuneration from the licensed intermediary. Notwithstanding that the SFC may not consider a cryptocurrency or a virtual asset as a security in many circumstances under the SFO, because the fund itself would be considered a collective investment scheme under the SFO, the interests of a collective investment scheme are considered securities, and the marketing of the investment interests of the fund will be considered a regulated activity, irrespective of the underlying assets. So unless one of the exemptions I've just mentioned apply, a license to conduct type 1 regulated activity will be required where the intention is to market the fund in Hong Kong, other than where there is an available exemption. In addition to the restrictions on marketing a fund in Hong Kong, fund managers must also make sure that they comply with the Hong Kong's prospectus regime. Today, we won't be discussing this in detail, but fund managers must be aware that any offer documents distributed in Hong Kong to the public, which offer for subscription or purchase shares in or debentures of a company incorporated outside Hong Kong, may also need to comply with the content and registration requirements in the Hong Kong Companies Ordinance. The SFC only has authority over entities conducting business activities in the very limited category of cryptocurrencies, which the SFC considers to be securities or futures contracts within the statutory definitions. The SFC has issued statements which bring certain entities within the scope of the licensing regime under the SFO, however. These are firms which are managing funds that invest in cryptocurrencies in addition to traditional securities or futures contracts. Companies marketing funds which invest in cryptocurrencies irrespective of whether they are securities or not, which is what I've just been talking about. Exchanges providing trading services in virtual assets, where at least one virtual asset is a security or futures contract, that would require a Type 7 license. The regulators in Hong Kong generally consider crypto, such as Bitcoin and Ethereum, to be virtual commodities which are not regulated in Hong Kong. The SFC released a statement on initial coin offerings in September 2017, in which they said that the SFC determines the regulatory status of cryptocurrencies on a case-by-case basis, depending on whether the cryptocurrency carries rights equivalent to traditional securities. For example, do they carry rights similar to those provided by shares, such as a right to a portion of the issuing company's profits or surplus assets on a winding up? Do they have rights similar to debentures, such as a right to repayment of the purchase price? Are they similar in nature to an interest in a collective investment scheme, where the purchase price will be invested in assets or projects and any return will be distributed to the holders? With regard to crypto and fund management, the classification of the cryptocurrency has implications for fund managers and their potential licensing under the SFO. Unlike the marketing of a cryptocurrency fund, which I mentioned earlier, which is a regulated activity irrespective of the assets held by the fund, the position in relation to asset management is different. Whether or not the fund management activities of a cryptocurrency fund will fall within the definition of asset management under the SFO depend on two factors. First, whether or not the cryptocurrencies are considered to be traditional securities under the SFO, and secondly, whether or not the portfolio of assets contains both cryptocurrencies and any other assets which are securities under the SFO. Asset management is a regulated activity and is defined under the SFO to include the management of securities, futures contracts, or real estate investment schemes. Managing a fund investing only in crypto, which is outside the definition, is therefore not asset management and doesn't require a Type 9 license. The SFC's regulatory jurisdiction under the SFO is limited and doesn't extend to cryptocurrencies, which are not considered to be securities or futures contracts. So a fund manager that only manages funds investing in crypto that are not securities or futures doesn't need to be licensed for Type 9 regulated activity. This is because, as I mentioned, asset management is defined in the SFO more narrowly and does not include instruments which are not securities or futures contracts. Managing a fund investing only in crypto is therefore not asset management and doesn't need a license. However, the position is different where a fund manager manages a portfolio which is a mixture of crypto and securities and or futures contracts as defined under the SFO. In these circumstances, the SFC have said that licensed portfolio managers intending to invest in virtual assets should observe essentially the same regulatory requirements, even if the portfolios or portions of them under their management invest solely or partially in virtual assets, irrespective of whether these amount to securities or futures contracts. In 2018, the SFC published a regulatory framework which deals with its regulation of portfolio managers which invest in crypto which are not securities or futures. Portfolio managers include both fund managers and managers of discretionary accounts. The statement extends the SFC's regulation of these activities to cover their crypto-related services. So where a firm is already or will be licensed for Type 9 activity for managing portfolios in traditional securities or futures contracts, its management of portfolios which invest in crypto, which are not within this category, is also subject to SFC oversight. The SFC exercises oversight over the firm's crypto-related activities through the imposition of licensing conditions. So an asset manager which manages securities and or futures and crypto, regardless of whether or not they're securities or futures, is subject to the overall oversight of the SFC. I'll now hand back to Megan and then Chris to talk about the recent developments in the digital space in Cayman and the Cayman Islands Virtual Asset Service Providers Act.
Thanks very much, Julia. As Julia mentioned, we're just going to touch on recent developments in the digital space in the Cayman Islands. So recently there have been various developments creating favourable conditions for cryptocurrencies in the Cayman Islands. I think the most notable of these is the introduction of the Cayman Islands Virtual Asset Services Providers Act 2021, and that's known as VASPA. This regulates virtual assets services providers and encourages technological development, creating certainty for those operating in the cryptocurrency space in the Cayman Islands. And I'm just going to hand over to Chris now, who's going to discuss this VASPA in a little more detail. Over to you, Chris.
That's right, Megan. The VASPA has introduced special regulatory frameworks for virtual asset service providers. It's providing greater certainty and ensuring compliance with internationally recognized standards. The Cayman Islands definition of virtual assets actually follows the definition used by the Financial Action Task Force. It includes all cryptocurrencies, security tokens, utility tokens, and commodities or fiat-backed stablecoins. VASPA regulates virtual asset services, and these include the issuance of virtual assets or tokens, or the businesses of providing one or more of the following services or operations for one on behalf of natural or legal persons or legal arrangements. And they include the exchange between virtual assets and fiat currency, the exchange between one or more other forms of convertible virtual assets, the transfer of virtual assets, virtual asset custody services, or finally, the participation in or the provision of financial services relating to the virtual assets issuance or the sale of virtual assets. Entities carrying out any of these services must pre-register with the Cayman Islands Monetary Authority, or CIMA. And VASPA service providers are regulated by CIMA will have to prepare annual audits and file them and have inspections by CIMA. They must also have registered offices in the Cayman Islands, provide documents and information required by CIMA, and notify CIMA of any activities in any other jurisdictions which it conducts. The next phase, phase 2 of VASPA, is expected to come in at any time. This next stage will introduce other provisions of VASPA, and specifically the provision of licensing of custody services or virtual asset trading platforms. These entities will have to get licensing from CIMA prior to carrying out any of these activities. Virtual asset trading platforms are defined in VASPA to include a centralized or decentralized digital platform which facilitates the exchange of virtual assets for fiat currency or other virtual assets on behalf of third parties for a fee or commission, spread or other benefit, and they hold and which hold the custody or control of those virtual assets on behalf of clients to facilitate the exchange. This is interesting because this introduces an element of potential licensing under VASPA by existing funds. Any fund that accepts as a subscription fiat currency, but on redemption returns assets in kind of another type of cryptocurrency, is potentially carrying out the exchange of assets and would need licensing. If I can hand back to Julia to discuss VASPAs in Hong Kong and the licensing regime there.
Thank you very much, Chris. That's so interesting. Well, Hong Kong, in line with many jurisdictions, as we've just heard, including Caymans, will regulate virtual asset service providers, VASPs. Currently, the SFC only licenses generally regulated activity for Type 7 automated trading platforms, which trade at least one security as well as other crypto assets. But Hong Kong's Financial Services and Treasury Bureau, the FSTB, in May 2021, published consultation conclusions on legislative proposals to enhance the anti-money laundering and counter-terrorist financing regulations in Hong Kong in respect of Hong Kong VASPs. The FSTB targets to introduce the amendment bill to the Legislative Council to implement the consultation conclusions in the 2021-2022 legislative session, in other words, quite soon. The legislative amendments are in response to the requirements set by the FATF that requires jurisdictions to regulate VASPs for AML-CFT purposes and to supervise their compliance. The FSTB proposes to follow the requirements of the FATF through the introduction of a licensing regime in Hong Kong for VASPs and certain other technical amendments under the Anti-Money Laundering and Counter-Terrorist Financing Ordinance. I'll call it the AMLO. The FSTB proposes to establish a licensing regime under the AMLO for VASPs in Hong Kong, which would require any person wishing to operate a virtual asset exchange in Hong Kong to apply for a license from the SFC. It's proposed that licensed VASPs would be subject to the AML-CTF requirements under Schedule 2 to the AMLO and other regulatory requirements. The business of operating a virtual asset exchange will therefore be a regulated activity. Virtual asset exchanges have been defined broadly and will cover a trading platform which is operated for the purpose of allowing an offer or invitation to be made or buy or sell any virtual assets in exchange for any money or any virtual assets, and which comes into custody, control, power, or possession of or over any money or any virtual assets at any point in time during its course of business. Excluded from the definition of a virtual asset exchange is an exchange which is a peer-to-peer trading platform to the extent the actual transaction is conducted outside the platform and the platform isn't involved in the underlying transaction by coming in possession of any money or any virtual assets at any point in time. Under the licensing regime, the definition of virtual asset will cover a digital representation of value that is expressed as a unit of account or a store of economic value, functions or is intended to function as a medium of exchange accepted by the public as payment for goods or services, or for the discharge of debts or for investment purposes, and can be transferred, stored, or traded electronically. The definition of a virtual asset doesn't cover digital representations of fiat currencies, including digital currencies issued by central banks, financial assets already regulated under the SFO, stored value facilities already regulated in Hong Kong, and as well as certain closed-loop limited purpose items such as store redemption cards. Only companies that are either incorporated in Hong Kong or registered under Part 16 of the Hong Kong Companies Ordinance as overseas companies with a place of business in Hong Kong are entitled to apply for a VASP license. The licensing requirements will require that the applicants appoint at least 2 responsible officers, and licensing applicants must satisfy a fit and proper test. The responsible directors and the ultimate beneficial owners of the licensing applicant have to satisfy a fit and proper test. A licensed VASP will be subject to AML-CTF requirements, including customer due diligence requirements and record keeping, set out in Schedule 2 to the AMLO. A licensed VASP will also be subject to additional regulatory requirements, which will be aimed at investor protection. To ensure that the licensed VASP has the capacity and expertise to operate a virtual asset exchange, it will have to meet further regulatory requirements, which include requirements in relation to financial resources, in relation to knowledge and experience, soundness of its business, risk management, including segregation and management of client assets, financial reporting and disclosure, prevention of market manipulation and abusive activities, and prevention of conflicts of interest. VASPs in Hong Kong will only be allowed to provide services to professional investors. The FSTB have said that confining the services of a VASP to professional investors is necessary to ensure a proper degree of protection for the investing public, in line with regulatory policy in Hong Kong of promoting healthy and orderly development of the market. The FSTB recognises that a licensed VASP will be required to make a substantial investment in order to operate a competitive virtual asset exchange. So a VASP license, once granted, will be valid until it is revoked by the SFC, which, in the opinion of the FSTB, will provide a degree of certainty for the market. Although the license is open-ended, the SFC will closely monitor, they have said, a licensed VASP's conduct and operations, and will have the necessary power to take disciplinary action, including a suspension or revocation of a license, where a VASP is found guilty of misconduct or they're not considered to be fit and proper. The FSTB won't grant any exemption from the VASP licensing requirement except for virtual asset exchanges that are already regulated as licensed corporations under Type 7, which I've already mentioned, in the voluntary opt-in regime, which is supervised by the SFC under the SFO. The FSTB will also prohibit any person who's not a licensed VASP from actively marketing, whether in Hong Kong or elsewhere, to the public, a regulated virtual asset activity or a similar activity conducted outside Hong Kong. For exchanges conducting regulated virtual asset activity when the VASP licensing regime comes into effect, there will be a 180-day transitional period for exchanges to get a license from the SFC. Now, over to Chris, back in Cayman, to speak about the structure of a crypto fund in the Cayman Islands.
Thank you, Julia. Yes, I think it's worth having a discussion about segregated portfolio companies. These are very useful entities in fund structures. They offer the benefits of having one legal entity with several or many different pots or pools with their assets and liabilities ring-fenced from one another. These are particularly interesting in cryptocurrency funds where the asset risks in one portfolio might be substantially different from another portfolio. The fund can be set up relatively easily and a new segregated portfolio created by simple board resolution. They're once established, the fund is registered. You can bring on a new segregated portfolio quickly and cheaply and easily. And they've proved to be extremely popular in the crypto fund space. So yeah, that's the structures that have been around for 20 years in Cayman, but particularly interesting and popular in this space. Julia.
Thanks, Chris. So I'm just going to talk a little bit about Hong Kong fund structures. In Hong Kong, we now have an OFC quite recently, and this is an open-ended fund in corporate form domiciled in Hong Kong. Unlike a limited partnership, an OFC is a separate legal entity with a board of directors. Each director owes fiduciary skills and statutory duties of care, skill, and diligence to the OFC. An OFC must register with and be approved by the SFC. Once the OFC is approved, it is then registered under the SFO and registered with the company's registry. Some of the key features of an OFC are that its assets must be segregated from the OFC and held by a custodian. It must appoint an investment manager, which is licensed or registered with the SFC for Type 9 asset management activity. It can be structured as a single fund, or alternatively, it can be structured to have multiple sub-funds. The assets and liabilities of each sub-fund belong only to the specific sub-fund and are not available to creditors of another sub-fund in the event of the relevant sub-fund's insolvency. Key operators of an OFC include the directors, the investment manager, and the custodian. The investment management function has to be delegated to an investment manager licensed under Type 9, as I've mentioned. So this type of structure is only suitable where the fund manager does have a Type 9 license. Additionally, it's important to remember that an OFC which will be publicly offered in Hong Kong must be authorised by the SFC under Section 104 of the SFO, and that would only be granted if the OFC meets the requirements of the Unit Trust Code, which includes the core investment restrictions set out in Chapter 7 of the Code. That's restrictions relating to spread of investments, limits on single entity and group exposure, restrictions on the amount of cash deposits the fund can't hold more than 10% of shares of an entity, restrictions in relation to unlisted products, government and other public securities, real estate and commodities. So as a result of these investment restrictions, a private OFC, that's one which is not authorised by the SFC, is the only one which may be suited for a cryptocurrency fund. However, as I talked about earlier, due to the Type 9 investment manager requirement, a private OFC can be used as a cryptocurrency fund only provided the fund manager has a Type 9 license, which is extended by the SFC to cover cryptocurrencies. And they would do this by applying to the SFC and complying with the relevant SFC terms and conditions to extend the license to cover crypto. We also have a limited partnership fund regime now in Hong Kong. It's an opt-in regime, which means that registration of a limited partnership fund under the Limited Partnership Fund Ordinance isn't compulsory. The limited partnership funds registered, however, under the Limited Partnership Funds Ordinance must be constituted by a partnership agreement and must have a registered office in Hong Kong. The ordinance provides flexibility in respect of contractual freedoms, which can be quite attractive to fund managers. There's generally freedom of contract regarding the operation of the limited partnership fund. In addition, the LPFO contains a number of safe harbours for those involved in certain activities of the limited partnership fund. A limited partner can conduct these activities which will not be regarded as management of the limited partnership fund and will not therefore compromise its limited liability status in respect of the limited partnership fund. This freedom of contract includes the right to decide on matters such as admission and withdrawal and partners, transfer of interests by the limited partners, organisation, management, structure and decision-making, investment scope and management. Unlike the OFC regime, the LPFO does not require that the investment manager of a limited partnership fund needs to be licensed or registered under Type 9 of the SFO. The limited partnership fund is required, however, to appoint a person who may be a general partner or another person as investment manager to carry out the day-to-day investment management functions of the partnership. However, where the investment manager of the limited partnership fund carries on any regulated activities in Hong Kong, clearly they would be subject to Hong Kong's licensing regime. Therefore, where the investment manager of the limited partnership carries on asset management in Hong Kong, that's really back to saying they need a Type 9 license. The SFC's regulatory jurisdiction under the SFO is, however, limited, and it doesn't extend to crypto or virtual assets, as I've already mentioned, which are not securities or futures. So an investment manager of a limited partnership fund which only invests in crypto that are not securities or futures doesn't need to be licensed for Type 9 asset management. So the Hong Kong Limited Partnership Fund may be better suited as a structure for a cryptocurrency fund in Hong Kong due to its flexibility when compared with the OFC, especially in relation to the asset management requirements. The legal form of a fund is only one, of course, of the important factors to consider when establishing a fund. Other factors which inform the decision on which jurisdiction and legal form to use include investor preference and familiarity. And of course, many investors are very familiar with Cayman due to its long history in the funds world, as well as commercial, legal and tax considerations. I'll now hand back to Megan to discuss the future of digital assets in the Cayman Islands.
Thanks very much, Julia. So we'd just like to run through some of the considerations for virtual assets, digital funds in the Cayman Islands. As Chris mentioned earlier, persons registered or licensed under VASPA will be subject to various ongoing requirements, and these include the licensee or registrant undertaking audits of AML systems and their procedures at the request of the monetary authority. Chris also mentioned preparing audited accounts and submitting those to CIMA on an annual basis. The licensee would also have to make sure that senior officers and beneficial owners are considered fit and proper persons, and also obtaining prior approval from the monetary authority to appoint those senior officers or any AML compliance officers. Just running on then to a few more considerations for digital funds in the Cayman Islands. So we need to comply with the AML regulations and Data Protection Act, and also ensure accuracy of all communications relating to those virtual assets services. Designating an officer with the responsibility for the procedures and for combating money laundering, so AML, terrorist financing and proliferation financing, and obtaining prior approval from CIMA, in addition to the points I've mentioned previously, before issuing or transferring equity interests totaling 10% or more in that licensed entity. So we'd just like to touch on other regulations that affect digital currencies in Cayman. So the Securities Investments Business Act, which is known as SIBA, this provides for the licensing and control of persons engaged in securities investment business in or from the Cayman Islands. So this sets out a list of financial instruments that constitute securities. And last year, this legislation, so SIBA, was amended to include virtual assets. And a virtual asset under that legislation is an asset that can be sold, traded, or exchanged, and that can be converted into or is a derivative of any of the existing SIBA listed securities, and that may also qualify as a security under that legislation. I should also mention that the Mutual Funds Act was also amended, which now includes virtual assets under that act as well as SIBA. So moving on then to the future of digital assets in the Cayman Islands. We believe that CIMA, the monetary authority, is taking a very commercial approach in respect to virtual asset services and fintech generally, actually, in order to maintain our reputation. as Chris mentioned earlier, CIMA's goal, they're wanting to develop an effective and commercially friendly landscape and environment for these crypto funds to operate in. This also aligns with various international standards and other jurisdictions. Innovations such as VASPA, which we've touched on quite heavily, the Foundation Companies Act, we've got the Enterprise City and Special Economic Zone companies also are helping with the future of digital assets and virtual assets in the Cayman Islands. So we thought it might be helpful to just set out, and this was from a recent PwC report, the top crypto hedge fund jurisdictions, and you'll see there that the Cayman Islands comes out top for the top crypto fund jurisdictions above the US and various other offshore jurisdictions. And on the right there, we've just shown the various manager locations. So you'll see Hong Kong is also listed there, which we thought would be helpful, and obviously bolsters Hong Kong and the Cayman Islands as crypto fund jurisdictions. So I think it's back over to Julia to do a comparison with the Hong Kong.
Thank you very much, Megan. Wow, that's impressive. Well done, Cayman. So the future of cryptocurrency and digital assets in Hong Kong, well, this is going to largely depend to some extent on how the regulators respond to the ever-evolving nature of these assets. To date, Hong Kong's regulators have been fairly reactive in their approach. The Hong Kong Monetary Authority has said that it doesn't regulate crypto, such as Bitcoin, which it regards as a virtual commodity and not as legal tender or a means of payment or money. While the SFC have said that they treat crypto, such as Ethereum and Bitcoin, as virtual commodities and will determine the regulatory status of crypto on a case-by-case basis, depending on whether the cryptocurrency carries rights similar to those of traditional securities or futures contracts. In the crypto fund space, there are examples of SFC licensed cryptocurrency funds, such as a Bitcoin fund, which tracks the price of Bitcoin and on launch aimed to raise $100 million US. The introduction of the new VASPs licensing regime in Hong Kong provides a framework to VASPs in Hong Kong. However, VASPs will initially be restricted under the new licensing regime to deal only with professional investors, which I think will seriously curtail the existing business of some VASPs. So that brings us to the conclusion of this webinar in terms of the formal part. So thank you to Chris and Megan, my co-hosts, and that brings us more or less to the end. Thank you all again for joining us today. I hope to see you again in the not too distant future for another webinar. If you're in the Cayman Islands, have a great evening, and if you're in Hong Kong, have a good day. Thank you all again very much for joining. Bye.
Bye-bye.
Thank you. Bye.